First of all, Luke, it's very good to have you. Thank you very much. I'm here with Luke Reiner. He is the executive chairman, actually, of Kalamazoo Resources. You have a gold project in Australia, almost 1.5 million ounces, which is very rare to be in Australia, very high grade compared to other assets. And the interesting fact about you and your company is that you and your family are heavily invested into that company, meaning your interest is very much aligned with my interest as a shareholder. So it's great to have you, and I'm really looking forward to our interview here.
Great to have you here.
Great to have you here in Frankfurt at the mine, and behind us all the big banks have their buildings. But let's talk about Kalamazoo.
Sure.
Give us an idea. I mean, we have seen a tremendous uptrend in the gold price, which is obviously very helpful. But you not just delivered on going with the gold price, you also delivered on your project side. You just released a study, right? A scoping study that gives us a first idea about the economics. So maybe give us an idea, what kind of value do you have in the ground?
Yeah, thanks, Jan. Yes, we've just delivered a scoping study for our Ashburton Gold project. Yeah. It's a 1.4 million ounce project, and the scoping study shows how we're going to get this project into development. Yeah. And so it's the first stage. It's looking very exciting. What we've done is focus just on one deposit, which is the Mount Olympus deposit, which is, we expect to produce about 530,000 ounces of gold in the open pit or the above ground. Yep. But that's just the start of it, Jan, because there's the potential then to go underground, potentially for another 500,000 ounces. And so we'll do a lot of work on that over the next little while on drilling and also studies, so that we then deliver a pre-feasibility study, which is the next step towards then going into production.
Yeah, that's very good. And there's something called the value curve. When you go into mining investments, right, it's all about de-risking the project. You already did the exploration work. Now it's about to de-risk. And looking at the numbers, maybe, I mean, it's a scoping study, right? We're not talking about a bankable feasibility study, but a scoping study. Give us an idea about the economics. So how much value do you have, and how sensible is it to the gold price? Meaning, we're all in a very bullish sentiment when it comes to gold. Yes. I think nobody really expects the gold price to crash tomorrow when you see the uncertainties in the world and all the debt crisis that we have. So let's say the gold price goes up. What is happening with the valuation of the project?
Absolutely. So we've been very conservative. We've used a US gold price of around about $2,950, which is much less than what the current gold spot price, which is about $4,100. So we want to be conservative, and it shows, but still, just for this open pit, a very robust financial project. If, however, you look at the spot price, all of a sudden the numbers almost double. And so we think that's the right criteria. But again, it's the growth story as well. We think or believe that with some drilling over the next 12 months, we may be able to increase that resource and that size of the project by 100%. We might be able to double it. And so again, if you look at the spot price and you look at a project that's twice as large, we think the financial parameters are very positive.
Yeah, that sounds very good. And also, if we have a look at your all-in sustainable cost, right, that is right now in your scoping study, we're looking about 1,400 US, which is still below the average, right? All the major producers, the all-in sustainable cost that went up because of inflation and because of labor and all this kind of stuff. So I think that's also very robust, and that's helping you.
Very much so. And part of the reason for that is that we've gone for a low capex approach, low risk. So technically it's a low risk approach, and that enables our all-in sustaining costs to be low. But importantly, the reason we've done it is because, again, we want to be conservative. Let's tick off the boxes first as we go ahead, and then as we grow the project, it has great upside for shareholders.
Excellent. And let's talk about the other upsides, because you're not just having this one Ashburton Gold project. You have some other projects as well that could be potential exploration work in the future. Give us an idea.
Yeah, and primarily we're in Victoria. Yeah. Victoria is well known for having high-grade gold. One of the world's most profitable and highest grade projects is the Fosterville project, which is owned by a company called Agnico. They took over a company called Kirkland Lake. We have ground very close to that. Plus we have a very large land package called the Mount Piper Gold Project. Interestingly, Jan, that's a gold antimony, and as you appreciate, antimony is very well sought after at the moment, and great demand for a whole range of reasons as a critical mineral. So we're doing a lot more work there. We're surrounded not only by Fosterville, but we've got Costerfield, which is a gold antimony project immediately to our north, And then immediately to our south is a project called Sunday Creek, which is owned by a company called Southern Cross. So we're in the right area. We intend to do a lot more work on that area over the next 12 months.
Yep.
And we think it's very, very bullish for us.
Very cool. And you and I just did a roadshow together, and in the room we had all investors, meaning including myself and including yourself, which is, I think, very important. Because when you have a CEO who is maybe not invested in his company or who doesn't believe in his company, that's one thing. But you believe and you buy shares, you participate in the placements. Give us an idea about the skin in the game. Your family is quite heavily invested, right?
Absolutely. And the background to that, Jan, is that myself and my brother, we started this company as a private company, and then we obviously listed on the ASX about 7 or 8 years ago. We haven't sold a share. In total, we own about 24% of the company. So our interests are directly aligned with our shareholders, such as yourself and others, because we're trying to make this work.
That sounds very good, and for us as investors, that's always very good to know, right? I mean, because we're at the sweet spot of this company. You're leaving the exploration phase, you're a developer now, and you want to go to production within the next 3 years. Is it realistic?
Absolutely, and part of that reason is that the Ashburton project is what they call a brownfield site, and that is there's been historical mining there, so issues such as mining leases or heritage, environmental, are less of a concern because people have mined there previously. So we think that's a great advantage and enables us to fast track it as much as we can.
Very good. And maybe for the end, you can give us an idea of the risk for the downside. So what could happen potentially? What could go wrong?
Yeah, I think gold price is always, this is very sensitive to gold price. But again, that's why we've used a very conservative gold price of 2,925 versus the 4,100. So that's our biggest risk, but we think we've got that covered. There's always delivery risk, and have you got the right people to do that? And that's one of the reasons why we've just recently put on a new director, an exploration director, Ben Ackerman, who previously was regional exploration director for Newmont, the world's largest gold miner. And so Ben has joined us, and we will continue to build that team out. So we've got to make sure now that on delivery, we have that covered.
Very good. Luke, thank you very much for giving us an update. I think it's a very compelling story, and we've seen the share price going up. But, well, I mean, considering there is way more to go with the gold price maybe, and maybe the Australian companies can catch up, that could be an opportunity to watch. Thank you very much, and we look forward to you delivering in the future.
Fantastic. Thanks, Jan.
Thank you.